Good afternoon, friends. We will take up on to problem number 17. MCQ. Measures X and Company and Measures Y and Company are non-resident firms in receipt of fees for technical services (FTS) of rupees 20 lakhs each in the previous year 2021-22 from an Indian company A Limited in pursuance of an agreement with A Limited approved by central government. Measures X and Company does not have any fixed place of profession in India, whereas Y and Company has a place of business, profession in India. And the contract is effectively connected with such fixed place of profession. The revenue expenditure incurred by X and Company to earn FTS is 2 lakhs. The following are the details pertaining to measures Y and Company. Revenue expenditure incurred to earn FTS 3.5 lakhs. Expenditure wholly and exclusively connected with fixed place of profession in India. Out of the above amount, 3 lakhs. Amount paid by fixed place of profession to head office other than towards reimbursement of actual expenditure. Not included in the above amounts, 1 lakh. Books of accounts maintained under section 44AA. Yes. Books of accounts audited and audit report furnished with return of income. Yes. What is the tax liability in India of measures X and Company and Y and Company for the previous year 21-22 in respect of fees for technical services? A 561,600, 4,99,200, 1,87,200, 5,30,400, 2,08,000, 5,30,400, 2,08,000, and 1,76,800. See, in order to understand as what real factors will influence the answer for this particular question is that it involves the application of NR taxation, chapter number 1 there, for NR taxation. What is the relevant things that we are going to take up? For non-resident taxation, especially for fees for technical services, popularly known as FTS, where the non-resident is having permanent establishment and having no permanent establishment. In this particular case, X and Company does not have. X and Company does not have. Y and Company, they are having. What are the relevant sections that would be applicable for non-resident assessees having permanent establishment in India? For them, profits and gains from business or profession will be applicable, and the relevant section is 44 EAD. Since they don't have permanent establishment in India, for them, NR taxation section 115A would be applicable, and tax is computed on the net income in the first case. In the second case, 10% of the gross FTS plus cess if any. Whereas in the case of an establishment where they have the rate of taxation is 30% plus 4%. 30% because they are basically firms. Then what is the basis on which we are expected to apply? So by taking up their relevant income, if I take up for the purpose of discussion, both the companies have earned 20 lakhs each. Let me take up firstly for no PE status for Xn company. And the question, because they have asked for Xn company and Yn company respectively. 10% on the gross FTS 20 lakhs plus 4% cess. It comes to 2 lakhs plus 4% on 2 lakhs. 2 lakhs and 8,000. So we understand A and B will not come into this contest at all. 2 lakh and 8,000, we have it against C and D. If you take up for Yn company where they have permanent establishment, the net income is to be computed. What is the net income that we are expected to compute? So by going through the problem, we understand that 20 lakhs being the gross income and against which expenditure wholly and exclusively connected with fixed place of profession, that being 3 lakhs that we can deduct. 20 lakhs minus 3 lakhs. So net income becoming easier for us to compute, which is 17 lakhs. So what 44 DA is communicating, that is what we are expected to operate. On 17 lakhs, we will apply 30% and plus 4% cess. I will talk about the other issues also. So by applying 30% on 17 lakhs, it comes to 5 lakh and 10,000 plus 4% on 5 lakh and 10,000. It comes to, our friend is indicating that it is 5 lakh 30,400. Now let us just check up the alternative that we have. 5 lakhs 30,400. So answer to that question is for 17, it is C. What is very important that we have got to understand is expenditure wholly and exclusively incurred or connected with the place of fixed place of profession in India will be allowed. What will not be allowed is expenditure wholly and exclusively not connected with the place of profession in India and amount paid by fixed place of profession to head office otherwise than towards reimbursement of actual expenses. Of course, they have said not included above cannot be taken up for deduction and it will be disallowed. So therefore, the appropriate choice in this particular case being 17C. For Xn company 2 lakh and 8,000. For Yn company it is 5 lakh and 30,400. So fairly a very good problem. Market order is very important for your examination. Thank you.